Today I'm going to talk to you about a very important subject, and that subject is related around the COVID-19 outbreak. Now, as we're all aware, most of the world is locked up right now, but we will start to re-emerge, and as our economies reopen, we may see what is called the second wave. The second wave's been discussed, but we haven't seen too many economies being reopened yet. And I'm going to talk to you about the leading indicators to what I think will show us whether the second outbreak or second wave is coming for us. So we'll talk about it right after this intro. So I'd just like to remind everybody to like, comment, and of course subscribe and hit the alert button if you enjoy our content. And we also have a free public Telegram with over 500 traders in it if you'd like to click on the links below. All right, so let's talk about the S&P 500. Now, I've taken this down to a 1 hour chart. And what I'm going to do is just highlight some key levels that we've seen recently. We've talked about these so many times on the channel, but they are going to be key to the rest of the information covered. So we've got the 2900 or 2891 point or resistance, and we've got this 2726, which has acted as support multiple times. So we've got support over here, support, and this will be one of those levels that if we break higher is going to be key for the bulls, and if we break lower, it's going to be key for the bears. In terms of what we expect to see, if this did happen, let's say it came down, went through, usually a concept called role reversal will happen around this point where support becomes resistance, and then that resistance, of course, would create further selling down to our next support zones, which again, we've been talking about and we will talk about further in this channel. So when we're talking about a second wave or second outbreak, really we have to look at China, as that's the main economy that's reopened so far. One of the key things or leading indicators that many people are speculating may show us whether the markets are truly open or in terms of the economies are truly open is the CO2 emissions, as there is a lot of production in China, and that of course emits a lot of CO2. So we see the 2019 stats and the amount of smog related CO2 emissions due to production. And then of course, since the China coronavirus outbreak, we have seen a massive reduction in terms of the CO2 emissions. What's more interesting though is when we look at Jan 1 to 20, they're really shut down quite early, and they may have shut down a little bit earlier than we even thought in terms of most of the economic activity. So this may be a lead indicator. Now that we've seen China reopen, we have to look at them to get an idea whether there will be this second outbreak. There's an article here in the Daily Mail, and that is that is China fighting a second wave of coronavirus? So Beijing's shutting down gyms, and potentially the city of 10 million people is put back into lockdown. Now, a couple of important things. We've obviously got China shut down gyms and swimming pools amid fears the country is vulnerable to a second wave. They probably wouldn't have done this unless they are seeing some form of spike or something has happened. Remember, they reopened them. Gyms, swimming pools, those kind of recreational areas are well known to be bad for flu. So of course, coronavirus would spread very easily in that area. It comes just days after, of course, the regime quarantined the entire city of 10 million people in northwest region of Russia. So multiple areas in China being re-quarantined after being reopened up. And this is just what we see. We don't necessarily have that much more information. So what might be worthwhile considering is if you can get reports on things like CO2 emissions, and let's say we had a satellite live feed, that particular live feed would be able to show us production and show us whether the economy really is open in certain areas and whether it possibly is not open. I think it's one of those lead indicators we talk a lot about in trading. Another article here about India, of course, dramatic effects again. This area, in terms of the area that does remain still quite smoggy, is because there's power plants there. But the north region, the northwest region, and even the northeast region, you can see the severe reduction in terms of CO2 emissions. Again, showing us that when a country is in lockdown or pretty much lockdown, there will not be many CO2 emissions, again being a lead indicator. If we believe there is a second wave coming, and that potentially is already possibly happening in China, then we also need to consider other bits of information. Now, the World Health Organization says that there's no evidence that having coronavirus presents a second infection. So if this is true and you can be reinfected, which is as we begin understanding more about this particular disease, then we may have something that's even more problematic. Potentially there's mutations here. Potentially the vaccine could be further off. We might have to constantly vaccinate every single year as it mutates and changes. I'm not a health expert, but all of these things will be of a concern to the stock markets. Remember, second wave has not been discussed. And that brings me to my last point. And that's the point of, as states are really pushing to reopen, how are these states in America, the world's biggest economy, really going to reopen and avoid a second wave? America has been hit the hardest in this crisis. We all are very aware of that. But on top of being hit so hard, we also now are starting to say, what's happening in China? If China couldn't stop it and America's already been hit hard, if they open too quickly, a second wave could be assured. And if a second wave happens, the stock market most likely has not priced that in. So when we consider these key resistance and support areas, we consider where the market's at as a whole in terms of this crash, even with the Fed stimulus, there are many signs that have not been mentioned enough in the news, and that's why I'm bringing this video. It's very, very important that we do consider the second wave implications on the stock market, not just on human health, which is obviously shocking, but also on the economies of the world. If we reopen and then have to start closing parts of the economies off again, it's that juddering effect that's going to affect everything in terms of financials. And that is very, very important. Do the world economies have enough stimulus left to survive this kind of battering? Time will tell, and we will cover this on this channel.